Hey guys, so what is the most common question? Actually, there's three questions I get quite a bit right now. What's going on with the market in view of the end of the foreclosure moratorium, the effects of current inflation, and the end of unemployment benefits? So let's unpack those and see what is going on. All right, as of 9/30/21 today, housing sales. You can see where they have been historically, fell off during the lockdown last year, and now they spiked, and they're still selling at above pandemic levels. Mortgage applications took a dive, came back real strong, same as housing, but they actually took a pretty good dip below and now have just kind of recovered. They're going to be affected by future decisions by the Fed. When people are trying to buy a house today, there's a lot of frustration because in the multiple offer scenario, cash buyers are usually selected. And right now, cash buyers are representing between 22 and 25% of all purchases of real estate. So it makes it real hard for people that have a conventional loan, a VA loan, or FHA loans. Because of the effects of the pandemic and the rental restrictions and foreclosure restrictions, rents didn't increase at all, may have decreased during the pandemic, but now they're showing a real strong uptick. Overall effect on prices way back in 2000, this light blue line represents Atlanta, went down, and now the average price for a home in Atlanta is over $300,000. This is not similar to 2008, and the reason for that is the fact that if you look back here, there was a big dip in equity and a fairly narrow band from right here, probably about 17, huge amount of billions, but this number was about 10, so there was about a 7-unit difference. Right over here, this is clean up to almost 35 units, huge amount of equity in the market right now, and meaning that if values came down, people would still be in good shape. Big problem we have right now is just inventory. This is back in the bad years. And as you can see right now, we are way down. We are lower than ever. Housing starts took a dive during the bubble, and we have not built enough homes to backfill that. It's estimated right now we have a $5 million resident shortfall in the United States. It is projected that the housing starts from 2020 through 2022 will be above the baseline number needed. We'll do some backfilling, but not nearly enough to fill that hole. Money is still real cheap, but how long will that stay that way? The Fed is talking about doing a couple of things. Number one is they're going to stop buying mortgage-backed securities from Fannie Mae and Freddie Mac later this year. That means we'll be having to sell those to mortgage-backed securities to institutional investors, and to attract them, they're going to have to offer a higher interest rate. The other thing, the Fed is talking about raising short-term interest rates early next year, and in the current infrastructure package, they're going to raise some mortgage origination fees to help pay for things. The positive impact for people seeking to buy is that they will count your rental payment history in order to qualify for a mortgage. So these are all national things that are going on. Now, this is something we're all seeing right now. As a matter of fact, today it was announced that we have the highest inflation rate for the last quarter in 40 years. Gasoline is up 43%, appliances 19%. You have a real hard time buying a car because of the chip shortage. The supply chain disruption is causing havoc. So inflation affects affordability. If your money is going to buy other things, it can't be used to buy housing. Jobs in Georgia, we are down 1.7% from pre-pandemic levels. 3 states, Idaho, Utah, and Arizona, do show a net gain in jobs. Everybody else is down, but we're off fairly modest. Now, the amount of jobs available right now at over 10, gotta add the thousands, 10 million, it actually exceeds the number of people on unemployment, which means there are jobs out there. It might not be the job that you want, but there's jobs available. Now, existing home sales, the prediction is that they're going to stay up for 2022. 2021 isn't over, but we're having a pretty big year compared to 2020, so we're expecting good things for that. Now, when we get super local here in Coweta County, I want to show you where we have a real issue, and our big issue is supply. We have plenty of people that want to buy a home. We don't have a lot of homes to sell, and as a result, there is intense competition for each and every home. This will be changing. The amount of homes available, if you look down here, this is, for example, homes between 150 and 175,000. 16 sold in September. There are only 2 units out there right now available for sale when I ran this report, which is 1/10 of 1 month's supply. A normal number for us, say 3 years ago, would have been 3 to 4 months. So this is leading to intense competition. You can see we stay below, at 1 month or below, at all price points, up to $350,000. That means that it's kind of like throwing meat into the river and the piranha are coming to get it. It's intense. When we start going above 350,000, it still is a very lean market in terms of available homes. Once we go above 500,000, we edge up to 1.8 months supply. So there were 45 of homes in that price point sold. There are 47 available right now. When we actually go above that, we start seeing the numbers rise. Most people are not participating in the market above 600,000. So we're seeing this. Now, what's going to happen is people that were affected by the pandemic who maybe were getting the enhanced unemployment or didn't have a job, but that was what's holding them up. We're in a situation now where virtually everybody has positive values in their home. We will see over the next 3 to 4 months a number of foreclosures will be coming onto the market. All that's going to do is make it a little less competitive, so it's not so crazy, but it's still going to be a seller's market. If you are a seller, it's a great time to get it out there on the market before the shift occurs to maximize your opportunities. If you're a buyer, you need to work with a savvy agent and you need to be patient. You need to know what you want. You need to listen to your agent and let them guide you to the appropriate home. I also suggest that at this point in time, you don't necessarily want, or it's going to be easier for you if you don't demand that everything be move-in ready and you get homes where you can put a little sweat equity into the house. So that's what's going on in the market. When we go super local, there's just not a lot out there. It's very intense. I hope this answers your questions for you. If you have any questions more about the information, I know I went through it quickly, let me know and we can have an extended conversation on that, okay? All right, thanks for your time.